Ever feel like you're walking into a foreign film with no subtitles when you try to make sense of the financial markets?
I know you.
Like everyone else seems to get it, but you're just kind of lost in the translation, right?
Yeah.
Well, today we're tackling that feeling head on with a deep dive into a system that claims to decode those market mysteries, the VFX system for financial trading.
Oh, interesting.
We've got our hands on this guide that breaks down their whole approach, and let me tell you, it is dense. Equations, unique analytical tools, even hints at their own proprietary wave theory.
Wow, sounds intense. So where do we even begin with a system this complex?
Well, the creators emphasize that they haven't actually reinvented the wheel. They're refining what already works in trading, just aiming for, that sweet spot of minimizing risk and maximizing those profitable trades.
Okay, so building on a solid foundation.
Yeah.
That's always reassuring, right?
Definitely. But they've definitely added their own unique spin on things. And it all seems to revolve around this VF's equation they keep mentioning.
An equation. Now you've got my attention.
Mm-hmm.
I don't think I've ever encountered an equation as the core of a trading system.
Me neither. So V apparently represents the first price reversal zone.
Okay.
Then you've got F, which represents a second price reversal zone. But here's the catch. It happens at the same price level as V.
Interesting. So it's not just about price levels, but also the recurrence of those levels.
Exactly. And then we get to X, which stands for a time-based reversal zone.
Time-based, now that's a curveball. Most trading systems I've come across are laser-focused on price action.
Right. This seems like a pretty big departure from the norm.
It really does. I'm curious to see how they factor time into the equation, so to speak.
Me too. It seems like the VFX system is saying that price and time are equally important players in identifying those potential market swings.
That could be a game changer for traders who are used to those more traditional price-driven approaches.
For sure. But okay, we've got this core equation down, but then the guide starts throwing around terms like analog metering and LAZR candles.
Yeah, I saw those too.
And I gotta be honest, it's a little intimidating.
They do sound a bit daunting at first glance, but take analog metering, for example.
Mm-hmm.
It's actually more about training your eye to spot patterns in how often, how rapidly prices hit certain levels on a chart.
So less about following a rigid indicator and more about developing an intuition for those key price points based on past action.
Exactly. You're looking for those price levels that act like magnets, constantly pulling the price back towards them. Those can be strong indicators of support or resistance levels.
Okay, that makes sense. It's like those price levels become self-fulfilling prophecies because traders are so focused on them.
Right. And that's what creates those trading opportunities. Now, what about acceleration and deceleration? That sounds like we need to brush up on our physics.
I know, right? But don't worry, no physics degree needed here.
This tool relies on something called Japanese candlesticks.
Oh, yeah, those little bars you see on a price chart, right?
Exactly. And each candlestick shows you the open, close, high, and low price for a specific time frame. Could be a day, an hour, whatever you're looking at.
Okay, I've seen those charts before, but how does that tie into this whole acceleration and deceleration thing?
So the size and the volume of those candlesticks can actually tell you a lot about the strength behind a price move.
Okay.
So a big, large candlestick, one with a lot of volume, that suggests a lot of momentum, like the market's accelerating, moving really fast.
Got it.
But then a small candlestick, not much volume, implies that momentum is fading. It's like the market's decelerating, slowing down.
So it's like we're gauging the market's speed and its energy. Big and powerful, we're speeding up. Small and weak, things are slowing down.
Exactly.
And by understanding that acceleration and deceleration, traders can get ahead of the curve, anticipating those shifts in the market's direction.
Right. It's about spotting those changes in momentum before they become obvious to everyone else.
This is starting to come together now. We've got tools for identifying those significant price points, assessing the market's strength, but how do we actually determine those realistic entry and exit points for our trades? How do we manage our risk?
That's where this concept of standard range comes in. It basically involves calculating the average daily price range for whatever financial instrument you're focused on.
Okay, so like the typical distance a stock's price moves up or down in a given day.
Right. So let's say a stock typically moves, on average, $2 up or down each day.
Okay.
That becomes your standard range. And knowing that, it helps you set realistic expectations for your trades.
So if we know how far a stock tends to move on a normal day, we're less likely to be caught off guard by those unusually large swings and make emotional decisions, right?
Precisely. The standard range basically provides you with a framework, something to ground your trading decisions in.
This is already giving me a whole new perspective on how to approach analyzing the markets. It's not just about chasing the big wins, it's about understanding the nuances of those price movements, that ebb and flow of momentum. But you know what? We've only just scratched the surface of the VFX System's toolbox here.
Oh, there's more.
Oh, yeah, there's more. Up next, we're going to dive into the fascinating world of Fibonacci and how this system uses it in a way you might not expect. Welcome back to the show. Before the break, we were starting to get a handle on the VFX system's unique way of analyzing price action and market momentum.
Definitely a lot to unpack.
But now we're going even deeper.
Oh, how much deeper can we go?
Because we're about to explore a concept that takes this whole system to a whole new level. Fibonacci.
Okay, Fibonacci. I've heard of the Fibonacci sequence, of course, but how does it actually apply to trading?
I had the same question.
So basically, traders have observed that market prices often retrace. They pull back a certain percentage of a previous move.
Like a pause, a little breather.
Exactly, before they continue in that original direction.
Okay.
And those retracement levels, they often align with these Fibonacci ratios, like 38.2%, 50%, and 61.8%.
So it's like the market takes a pit stop at these predetermined locations.
Pretty much. And these Fibonacci ratios, they act like signposts, kind of telling you where those pit stops are most likely to occur.
That's interesting. So how does the VFX system actually utilize these Fibonacci retracements?
In a few really intriguing ways.
Okay, tell me more.
One way is through something they call the virtual correction zone.
Virtual correction zone. That sounds both intriguing and like a little bit scary.
So picture this. You're looking at a chart,
Uh-huh.
and you've identified a recent price move, right?
Okay, got it.
Now imagine a zone between the 38.2% and 61.8% Fibonacci retracement levels of that move. That zone, according to the VFX system,
Yeah.
that's prime real estate for price corrections.
So it's like a high probability zone for the market to take a breather, for buyers and sellers to duke it out a little bit
Exactly.
before that dominant trend resumes.
Exactly. And being able to identify this virtual correction zone, it gives you an edge. You can anticipate those potential price reversals and make smarter trading decisions.
This is making a lot more sense now. Okay, so Fibonacci levels, these kind of magical ratios that just seem to work, they can actually help us understand how the market behaves. But I gotta ask, the VFX guide, it mentions something called passive Fibonacci. Now, how can Fibonacci, with its specific ratios and levels, be passive?
You know, that's a great question. And to be honest, the guide doesn't really give us all the answers on that one.
Well, figured.
But from what I gather, passive Fibonacci, or PF, it still involves drawing those Fibonacci retracements.
Okay.
But this time, we're using different price wave formations to pinpoint those potential reversal zones.
Interesting.
I think what makes it passive is that it relies less on your own subjective interpretation and more on recognizing those recurring patterns within those predefined Fibonacci levels.
Got it. So less intuition, more pattern recognition. But the guide, it does mention that there are 4 different passive Fibonacci setups.
There are 4 setups, each with its own little twist.
Can you walk us through how one of those setups might actually play out in a real trading scenario?
Sure. Let's say we're looking at the second PF setup, the one that uses those double tops or bottoms as reference points.
Okay.
Imagine a stock price. It's formed 2 peaks, one after the other, at roughly the same price level.
A double top. Got it.
Exactly. Now, you would draw your Fibonacci retracement levels starting from the low point between those 2 peaks, right?
Yep.
And according to this setup, that 38.2% or 50% retracement level, those could act as resistance zones where that price might reverse.
And continue its downward move.
Precisely.
So using this specific passive Fibonacci setup, a trader could, in theory, anticipate that price reversal and make a move.
Exactly.
That is wild. But okay, let's not forget about the other mind-bending concept we touched upon earlier, time. The VFX system, it puts this unique emphasis on time-based analysis, which is not something you see every day in trading.
No, you definitely don't. And that's where the concept of actual time of reversal, or TX, comes in.
TX, catchy.
The guide suggests that by using time-based Fibonacci tools, we can actually identify potential reversal points in time.
Time-based Fibonacci. We're talking about like measuring time in Fibonacci spirals or something.
No, nothing quite that complicated.
Okay, good.
Think of it this way. Let's say a stock has been in an uptrend for, say, 5 days.
5 days, okay.
Using a time-based Fibonacci tool, you would then mark potential reversal points at the 38.2%, 50%, and 61.8% levels of that 5-day period.
Interesting.
And these time-based levels, when they line up with significant price levels or other technical indicators, They can provide valuable clues about those potential trend reversals.
So it's not just about where the price is on the chart.
Right.
It's about when it reaches those levels.
Exactly. And to make things even more interesting, the VFX guide outlines 3 different types of TX tools.
Of course they do.
You've got your fixed, your moving, and one that's actually based on those double tops or bottoms we talked about earlier.
Wow, so many options.
Each one offering a unique way to incorporate this whole time dimension into your trading decisions.
This is blowing my mind. Combining those Fibonacci levels with this time-based analysis, the VX system is really offering a whole new way to understand how markets move.
It really is a different way of looking at things.
But the VFX guide, it's got even more up its sleeve.
There's more.
Oh, yeah. We still haven't explored those cryptic terms, those LAZR candles and Vmaps, which, I gotta say, sound like they belong in a science fiction novel.
I'm intrigued. Let's dive in.
Welcome back to the show. We're still knee-deep in this VX system, trying to wrap our heads around all the unique tools it uses to, crack the code of the financial markets.
Definitely a lot to absorb.
Last time we were blown away by the whole concept of using Fibonacci, not just for price levels, but for time-based analysis, too.
Right, time-based Fibonacci, who knew?
But the VFX guide doesn't stop there. Remember those cryptic terms, those LAZR candles and Vmaps we stumbled upon?
Oh yeah, like something out of a spy movie. I'm still not quite sure what those are all about.
Me neither. But hey, that's part of the fun of these deep dives, right? Unraveling the mysteries together.
True that.
The guide definitely plays it close to the vest on these, but we can be analytical sleuths here.
Put our thinking caps on.
Exactly, and see what we can piece together. So, LAZR candles first.
All right, LAZR candles.
Mm-hmm.
Where do we even start with that one?
Well, we know this VFX system puts a lot of weight on those Japanese candlesticks, those visual representations of price action on a chart, right?
Right, the candlesticks. Got it.
Maybe, and this is just a theory here, LAZR candles refer to a specific subset of candlestick patterns that this system recognizes as particularly significant.
Okay, so not just any candlestick pattern, but like the VIPs, the ones that are really worth paying attention to.
Exactly, like flashing neon signs screaming, hey, something big is about to happen here.
That makes sense. Go on.
Maybe these LAZR candles, they hold a higher weighting in the VFX system's analysis. Maybe they tend to pop up at those critical junctures near those key Fibonacci levels we talked about.
Or in those virtual correction zones.
Right, and they amplify the importance of those points as potential reversal points.
So it's like they confirm the signal. We're seeing those Fibonacci levels. We're in that correction zone. And then boom, a LAZR candle appears, and that's our cue.
Exactly, like a three-pronged confirmation. Okay, so we've got a working theory on LAZR candles. But what about those Vmaps? Is the system giving us a whole new way to chart the markets?
It's certainly possible. The guy just throws out these little breadcrumbs, VMAP maps, and how to draw them. So that tells me there's some kind of unique charting technique here.
Like a secret code, only accessible to those in the know.
Right. It could be that these VMAPs are how they bring it all together.
Bring what all together?
The price action, the Fibonacci levels, the time-based analysis.
Okay, so everything we've been talking about, all those different tools and concepts.
Yeah, all rolled into one comprehensive view.
So it's like a master map, highlighting those hidden trading gems everyone else is missing.
Exactly. And this focus on visualization, on combining all these different layers of analysis, it brings us to what might be the most fascinating.
And the most mysterious.
Yes. Part of the VFX system, those VFX waves.
Right, the VFX waves. We've danced around this concept, but it feels like VFX waves could be the glue that holds this whole system together.
Possibly.
But before we dive into the deep end with VFX waves, let's take a step back. Can you give us a quick refresher on Elliott wave theory? Because it seems like that's where this whole wave concept stems from.
Sure. Elliott wave theory, it basically says that markets move in these predictable wave patterns driven by investor psychology.
So those waves of fear and greed we hear so much about.
Exactly. You've got your impulse waves, which move in the direction of the main trend.
Got it.
And then you've got your corrective waves, which move against that main trend.
So it's not just random chaos in the market. There's actually an underlying rhythm, a kind of financial heartbeat we can learn to recognize.
That's the idea behind Elliott wave theory anyway. And what the VFX guide seems to suggest is they've taken those core Elliott wave principles and woven them together with their own unique tools and concepts.
Okay, so the time-based Fibonacci, that emphasis on price action, even those LAZR candles and Vmaps, it's all connected.
It would seem so.
So it's like they've taken a classic, that Elliott wave theory, and given it their own signature twist of VFX upgrade, if you will. But, what's really striking me about this whole system, and maybe this is the real takeaway here,
What's that?
it's the emphasis on interconnectedness, on how all these different analytical tools actually complement each other.
It's not about mastering one single technique. It's about understanding how they all work together to get the full picture.
Right. Like we can analyze the price action, we can use those Fibonacci levels, we can factor in time, we can look for those LAZR candles, and maybe even map it all out on those Vmaps. But it's the confluence of all these factors, those multiple points of confirmation, that really tell the story.
Absolutely. That's what makes the VFX system so fascinating. It encourages traders to think outside the box, to look beyond those traditional indicators, and to develop a more well-rounded approach to understanding how markets really work.
It's been quite a journey, this deep dive into the VFX system. So much to think about, so many new tools and concepts to explore. Big thanks to you for breaking it all down for us. And to our listeners, keep those minds curious and those trading strategies evolving. We'll see you next time.